Good evening, sir. We solved ISCO question on ISCO
Question
diluted
of,
with share option.
oh, we stop at share options.
Yes, sir.
Okay, good. Thank you. I really appreciate. Okay. You said for diluted. Diluted, yes. So three things can make it to dilute. Talk about share options. Which to warranty. Then we talk about the convertible loan as stock. Then the convertible preference shares. These are the three things we said. We said share options. One, does not bring earnings to the organization, but it will increase the numbers of shares. It will increase the numbers of shares for the denominator. Then we said we are going to apply the formula. So then the formula we apply, which is average market price minus option price divided by average market price times option issue. Option issue. Good. Then we say for the convertible, it must be convertible. One, it increases the earnings. Increases the earnings. Two, it also increase numbers of shares. Then we said these three steps must be taken. One, we will determine the earnings. Determination of earnings. Two, we said the conversion to shares. And the third one, we test for dilution. And for it to dilute, we pick this way. If it dilutes, inclusive. If not, it is anti-dilutive. But if we dilute, it will be inclusive. This is what we said. The formula still remains the same. Okay. Let's take another question. We have done share options. We are still going to do it in the combined questions. Let's take question. Let's go to question 4. Bella PSC. Let's take Bella. Bella PSC. Bella PSC. Bella PSC. Question 4. Bella. If you go to the requirements of Bella, requirement says calculate basic earnings per share for Bella, including the comparative. Oh, in exam, that means there will be right issue or bonus issue in it, or the two of them in the question. Was okay. Basic EPS of which year? 2016, of 30th September 2016. The comparative year, that is the restated. Stated EPS of 30th September 2015. And the diluted earnings per share of 2016. The diluted EPS of 2016. 30th September 2016. Good. Now, let's go to the question. Answer study. Profit after tax of Bella for the year ended 30th September 2016 was 30 million. They has given me profit for the year. For the year, or they say for the period. Or they say after tax. The same thing. They say it's 30 million naira. Good. According to the question. Now, that is sorted. On 1st October 2015, the company had in issue 72 million equity shares. Share in issue, opening balance. So share in issue, which is 72. Good. 72. And 20 million, 8% convertible loan. It is convertible loan. It must be convertible. Convertible loan of 20 million, interest of 8% at 8% interest. Good. Next. Term of conversion. The loan will be matured that will be redeemed at par or converted to equity shares on the basis of 50 shares for each 100. Conversion term. Basis of conversion. 500 shares for 50. 50 shares. Don't forget, shares must be up. 100 shares must be up. On 1st of January 2016, Bella made a full subscribe right issue of 1 new share for every 4 shares at a price of 2 naira. Oh, there's a right issue, which I know how to calculate. We have a right issue. Right issue, condition. Say 1 for 4. I have 4, you are giving me 1. No problem. The right price. is 2 naira 80 kobo, according to the question. Then he also said the market price per shares is what? 3 naira 60 kobo. Don't forget, when it is right issue, I will calculate bonus issued factor, which is equals to market price per share all over theoretical S right price. Good. The earnings per share reported for the year ended 30 September, they've given me earnings per shares of 30th September 2015. Why? Because of the restated. To be how much? 35 kobo. Good. I am done with this. That is the data giving me the question. Now say I should calculate basic. Don't forget your tables. We'll go for the, before you can talk of dilution, there must be basic first. Because basic is the yardstick to know whether it has been diluted or not. I'll draw the table. Say Bella. Don't forget we have dates. After date, we have details. After the details, we have number of shares. Then the total shares. Then we have bonus issues factor. In some textbook, you will see it bonus factor. Then we have the time frame, time factor, how the share comes in, the changes, the time it comes in, then weighted average shares. Don't forget to calculate basic. I've told you what are those things that come with basic. We have share in issue, which is the opening balance, issue at the market price, price issue, we repurchase. After repurchase, we have bonus issue, right issue, stock split, stock dividend, reversal of stock split. Good. Those are things that go for the basic. Please, have we done stock split in this class? Hello, ma. Have we done stock split?
No, we haven't.
Stock dividend? What about stock
No.
dividend? Huh?
Sir. No, sir.
No, sir. Let's see. Okay. Thank you. We will take care of it in this class. Okay. Let's proceed. He has given me as at 1st October 2015. He said the opening balance 72, which is 72. Then when they made the right issue was done on 1st of January. I'll say 1st January 2016, right issue. What is the condition for the right issue? 744. Let's go to the calculation of right issue. Right issue. Right issue shares 1/4 times 72. 1/4 times 72 will give us what? 1/4 times 72. What does it give us, please? That my
80
sister,
80 million.
80 million. $80 million. Now I need to get the bonus issued factor, which is the market price per shares all over theoretical extract plans. Market price per shares is given equal to 3.8 divided by, let's go to the theoretical. To calculate theoretical extract price, 144, 4 will be at a market price. The one you are giving me below the market price, which is the right price, 2.8. 2.8. This will give me 2.8. 4 times 3.08.
15.2.
15.2. Then I will have 5. 15.2 plus 2.8. That will give us 18. Then theoretical S right price will equal to 18 divided by 5.
3.6.
Huh?
3.6.
Thank you. 3.6. So I've got my bonus issue factor. Don't forget, it must be given to existing shareholder. So I'll now say 3.8 divided by 3.6 will be given to existing shareholder. This one is 18 million. 18 plus 72, that will give us 90. So 3.8 divided by 3.6. Then from 1st of January to 1st October to 1st of January. From 1st October to 1st of January, how many months? From 1st October to 1st of January.
3 months.
Thank
3
you.
over 12.
That will give me 3 over 12. Why this one will give me 9 over 12. I am done. I can now calculate my basic. I will now say 72 million times 3.80 divided by 3.6 times 3 divided by 12. What does it give me? The 90 million times 9 over 12.
90 million.
Which one is 90 million?
The first one.
Thank you, ma'am. Then the second one.
$67.5.
67.
Yes, sir. Let me redo it.
I will now sum it together. Let me first. Do you receive leisure yesterday? Do you receive leisure yesterday? Because because of Super Eagles.
Oh, we're here, though.
Huh?
We are still here. We had classes today.
Yeah.
Though many of us was online.
Yesterday we are celebrating Super Eagles. What is now the total?
86.5.
56?
86.5.
86. So I can now calculate my basic now. He has given me profit of 30 million. So I can now say earnings per share will now be 30 million divided by 86,500 times 100. Then to restate, that would be 3.6 over 3.8 times earnings per share of the previous year, which has given us 35 kobo, or multiply them for the dilution, 20 million. I need to determine the earnings. Okay. Determinations of earnings. We have 20 million. Times, what is the interest rate? I will not pay this interest again. It will be converted to what? To my earnings. The government will collect tax. What is the tax rate given you? 25%. So 0.2 times 8, 20 million times 8%.
1.6.
So that will give me 1.6 million. Then the tax rate. Government will collect 0.25 times 1.6.
400,000.
500?
400.
400. So this is the earnings that come to the organization. For converting the shares, the interest will be ours. Then what is the conversion term? Conversion to shares. The principal amount, how many shares are we giving back for 20 million? The base of conversion will be given in the question. According to this question, 50 shares over 100 naira. Don't forget, shares will be up. 50 over 100, this will give me 10 million. I will now test for dilution. By saying earnings of 1.2 divided by 10 million divided by 10 million times 100. That is all.
That's 12.
Eh?
12 kobo.
5 kobo.
12, 1, 2.
12 kobo. But I don't know whether it is diluted or not. I need to get my basic. What is the basic earnings per share? I'll go and get the basic. I have 12 kobo. What is the basic earnings per share? What is the basic earnings per share? 30 million divided by 6.
35 kobo.
I will now put, oh, that means it is diluted. I can now calculate my diluted earnings per share. So 30 million plus 1.2 million divided by 86,500 shares for the basic plus 10 million or multiply by 100. This one will give me 31 100 divided by 96,500 That is 100. So I can get my diluted earnings per share. I can get my diluted earnings per share. What is it?
32.33.
32.33.
Yes, sir.
32 or 33. The issue. So, next. What is the restated? There any question for me? What is the restated? What is the restated? So that I can go to the next question. Hello? Hello?
Yes, sir.
The restated earnings per share. And any question for me before we move on? What is difficult? 3.6, 0.6, 4.8, 33 cover. Any question for me?
Sir, sorry, I have a question.
Okay.
It's not relating to this Bella that we just saw, but
Okay.
rather it's relating to Shabab.
Shabab. Do we solve
Yes,
Shabab?
sir. You asked us to solve it.
Okay, I ask you to solve it.
Yes.
But you did not submit now. I will send the solution to you.
I had issues with the question. That was why I couldn't submit, and that's why I wanted to ask.
Okay, no problem. Now. Yeah, go ahead.
Okay. So, the bonus issue factor for that question, I could not calculate the bonus issue factor because they had already given us the number of shares that were for the bonus, but the issue factor is where I had a problem. I didn't know how to go about it.
Okay, no problem. No problem. That's not an issue anyway. Okay. That is not an issue anyway. Just the okay. Any other question apart from that? For the Shabab? Any other question apart from that? Is the Shabab
No.
clear to everybody? Is the Shabab clear to everybody? Should we take it?
It's not clear,
Yes,
sir.
sir.
Huh?
It's
Yes,
not
sir.
clear,
Should
sir.
take
Solve
it.
it, sir.
Have you solved it?
Yes, sir.
Okay.
Yes, sir.
Final answer, Shabab. I told you when they give you financial statements, the first thing that will come to your head in exam, how do I determine the opening balance? Good. Then you go to the requirements. The one they will say you should calculate is at the end, so that you can know the opening balance. If you go to Shabab question, the Shabab is saying we should calculate basic earnings per share. Be part of the question. Apply the requirement of ISR 3, earnings per share. Information above will calculate the basic EPS as at 31st July. 31st July 2016. And the comparative figure, oh, the basic EPS of 31st July 2016 and the restated EPS of 31st July 2015. Account that will close in 31st July, definitely it must have started of 1st August. Do we agree? 2015. It must have started 1st August and closed in 31st July 2016. This is going to be the opening balance. It's either you give me on this day or you give me the closing balance of 30th July 2015. Or you give me a day after. Immediately I can determine the opening balance. All is gone. I am okay. They will not give you opening balance in additional information. It's the changes that occur. But in the financial statement, you pick your opening balance. Let's go to the financial statement now. He has given me, he said, consolidated statement of profit or loss and lack of income for the year ended, together with the comparative years. Good. And the following figure are taken from the Shabbat statement of financial position. Where do we see share capital? SOF balance sheet. Equity share capital. Is that I say equity share capital? Or you say, oh, ordinary share? Or you will say equity share, ordinary share capital, ordinary share or share capital. That's the three language. Now, what is now my own duty? Share capital was given as a what date? 2016 year end, 2015. I only need that of 2015. But it's in value. I need to convert. It is in value. I need to convert it by saying total numbers of shares, workings, total numbers of shares equals to the values of shares all over the nominal value. Values of share is 200, but he has given the nominal value in units to be 0.5. So this will give me 400. That is what he's saying. After I've got my opening balance, everything remains the same. This is the highest. Immediately we can get that. My sister. Just go and solve your question. Draw your table. I will say details, dates, details, number of shares, total shares, bonus issue, bonus issued, author, weighted average shares. That's all. First August 2015. Opening balance 400. The next thing is that additional information straight. What happened during the year?
Sir, please. Sorry, can you hear me?
Yes, I can hear you very well.
Okay. So the date we're supposed to be using is 1st of August 2015 to
Yes.
31st of June 2016. So
It's a 12 calendar month.
yes. So does that not mean this 2016 year, the equity, that's the 460, that's supposed to be the closing balance since it's the opening balance, or was that wrong? Why are we using 200, not 460?
What are we using?
Why are we using 200, not 460?
200.
Yes, sir.
Where do you see 200?
The value that we use is 200 divided by the price in order for us to get the share 400.
Yes.
That's what I'm asking. So why is that on 900?
Why do I not use 900?
Yes, that's the
No, 900 is at the
divided by-
closing of the year. Closing of 2016.
Okay.
We want to know what is the weighted average that qualify for earnings. The 460, let's divide 460 divided by 50 cover. What does it give us? 460.
920.
920. That is the closing. That is the closing for 2016. All those 920 does not qualify for earnings. We want to know the weighted average that qualify for earnings. You know, as at the beginning of the year, they will not be telling us what happened. They make a right issue, bonus issue, repurchase, fresh issue. All to the total. When you are accumulating it, you get 920. But not all the 920 qualify for earnings. Not all the, that's what he's saying. If somebody join your company on the 20th of December, it will not qualify for anything. No 13 months, no rise, no nothing. But it will also be part of the staff of the organization until next year. That is what he tries to say. Not all those people, shareholders, qualify for earnings, or we need to parade some people. That's what he's telling you. So I will now go to additional information. During the year 31st July 2016, the following changes took place to the issue share capital of Shabab PLC. 100 million equity shares were issued in conjunction with acquisition of another business. These were issued at the full market price at the date of the issue is 1st November. There's nothing concern me with conjunction with another acquisition. What is the COCO 1st November 2015? Fresh issue. 100 million. 100 plus 100, we have 500. That one is settled. Next, I'll go. $150 million ordinary share were issued for cash to a existing shareholder. Two things can be issued to a existing shareholder. It's either they issue bonus issue or fresh issue. Don't forget, bonus issue is no cost. Nothing is involved. But let's go on. For cash, that means it's right issue, not bonus issue. On 1st February 2016, 1st February 2016, right issue. They did not mention right issue to a existing shareholder. The issue price was 1 have to correct the right price, which represents the discount of 1% on the traded price immediately after the issue of 2 naira, market price per share of 2 naira, and the right price. And he has given me the number of share with that. 150 plus 500, 650. I need to calculate bonus issue factor. He has given me the market price per shares. For the right issue now, condition, no giving. But I know what to do. The right price, the market price per shares, bonus, issue factor, cost to market price per shares all over. The market price per share is 2 naira. Now, theoretical. according to the question. It does not give me condition. I will do it on the individual, on the totality of the company. 500 at 2 naira. 150 at, this will give me 1,000. 150 times 1.5. Hello?
225.
225.
225.
Yeah.
$650. And that's 1,225 divided by 650. What does it give us? Yeah.
1.9.
So I'm done with that. It must be given to who? Existing shareholder. But wait, oh, the solution is not with you.
No, sir.
Eh?
Let's check.
I send the solution for this now. Bonus issue factor 2/1.9 given to existing shareholder. That is not. I'll go to the next one now. What does the next one says? On 31st of July, that's the last day. 31st of July 2016. What happened? Bonus issue of 270 million shares were completed, capitalizing bonus issue 270. There's nothing concerning me with the capitalizing. That one has told you. But we made a bonus issue of 270 in the last day. How do I get the bonus issue to be given to a existing shareholder? Very simple. We have 650 for the bonus issue. We have 650. You are giving us 270. 650 plus 270. 650 plus 270.
$920.
Eh?
$920.
920. Divided by what we have before. That is it.
$1.4.
1.4.
1.4.
Don't do that. You must have approximate to 920, which is the first 60 you are seeing in the question. It must be given to a existing shareholder. 920 divided by 650. That is all. I'll go to the time factor. From 1st of August to 1st of November. First of August to 1st of November.
3/12.
How many months?
3/12.
3/12. You sure? It's okay. Thank you, ma'am. From 1st of November to 1st of February. November, December, January. 3 months. From 1st of February to 31st of July. 1st of February to 31st of July.
6/12.
I think that's 5/12.
6.
Let's count. February is inclusive. That is 6 months. From 31st of July to 31st of July, not applicable. No time factor in between. Not applicable. So the closing balance is 920. I will now multiply. 31st of July to 31st of July does not make sense. No time factor. It happens at the last day. I will now say for total shares, 400 times 3/12 times 920 divided by 650 times 2/1.9. That gives me a figure. Yeah. Not much, but
149. First one.
what do you call?
149.
149 point what?
I approximated. 149.
Can we approximate? Okay. Next.
One 1862. Oh, 186.2.
1.
186.
186.
Let's approximate it.
186.
186. I hope it's correct.
Not to
Yes,
1.8.
correct.
Is 186.
$460.
Next one is 160.
I said 460. 460. Not 160.
We'll sum everything.
795.
9.
795.
What is it?
795.
That is that. We can solve the remaining now. Let's solve smooth time.
So about the assignment you
That is that. Eh?
yes, sir. The assignment you sent to the group, sir.
As you send to the group.
The assignment, the last assignment you sent to the group chat.
I forgot to. Which one? Please, sorry. Is it the objective?
No, let me. Okay. I'll refer to it later, sir. Continue.
Sorry. So you can do the rest. Let's move on. Let's move on. There are so many things to do. Which assignment you
Hello,
gave
sir.
now?
Hello, sir.
Okay, I'm with you.
Sir, please, can we have this solution of the group chat?
Which one?
This one that we just solved, can you send it to us
It's in your
as in the
solution.
solution?
The solution is in your book already.
Okay,
The,
okay, sir.
the one I sent to Mr. Wasil, it contains this particular question and the solution. Go and check. But if you want me to send it, I will send it. There's no issue on that.
I have question on stock dividend.
Stock dividend.
Yes, sir.
Have you done stock dividend before? We have not done. Yeah, we have.
It's part of the assignment you sent to the group, sir. I think I solved some of the questions and I think
Oh, you are talking about AFCAS.
yes.
AFCAS. We are bringing it on board. AFCAS Limited.
Yeah.
AFCAS does not have chestmates, Joe. Does it have chestmates? Let's do the one that has split so that there has stock dividend and there has stock split.
Okay.
Or let's do it too. Okay. That means we not start group to do AFCAS. Oh yeah. Do you have the question with you?
Yes, I can share it. It's in the group, sir.
Okay. Well, I've forgotten. You need to reshare it again. No.
Okay, sir.
I'm even looking for it. Okay.
Question 1B, sir.
Okay. At the beginning of the year, after International, how the following complex capital structure? What happened? The requirements. As soon the fiscal year, calculate the year-end Africa's basic earnings per share. Say we should calculate basic. Basic. Yes. Good. Let's go to the workings. What does it say? Let's start our working here. As of the beginning of the year, Africa had the following complex structure: 3 million equity shares outstanding for opening balance. Share issued 3 million. Once that we have 1,000 option with an exact price, is that one go for basic? No. Option is for diluted. And he said I should calculate basic. What concern me concern that one? 250 warrant with exact price, unless you want us to see calculate options. On 1st March, the company issued 100,000 new shares of common stock. Oh, fresh issue made. On 1st of July, the board of directors declared 50% stock dividend. And on September 1, the company repurchased. I'll just open my table. This is a simple question. Let's open the table. We'll say we have dates, details. We have numbers of shares, total shares. We have stock dividends. Time factor, weighted average shares. Just weighted average shares. That's all. On 1st of January, 1st January, opening balance. Total. Then 1st of March, fresh issue. Then 1st of July, stock dividends. How many percent of the stock dividend? 50% stock dividend. Very simple. What is stock dividend? Instead of shares, we don't have, the company does not have cash. So let's give you stock dividend. We'll not give you shares. Stock dividend of 15%. 15% equals to 15 over 100. That means the question is 15 for 100, just like your bonus issue. Because it is free. Stock dividend is given to shareholder, free. We have 100. They are giving us 15. 115. Divided by what we have. This is it. This is the stock dividend. It must be given to existing shareholder. 115 over 100. Or I can get number of shares for the stock. Somebody's shouting me now. Somebody has deleted it. Number of shares for the stock, 2 ways. You can say 15% of the total. What is our total? Three one. 31 is our total. 50% of 31. 2% of 31.
465.
What do you say?
465,000.
465,000. Or what is the total numbers of shares after stock dividends? Is equals to 115 over 100 times which will give you the same thing. What does it give us? Hmm? One one five over 100 times this.
3,565.
3 million
565.
565. I can go there 3,565. I can say total shares, total stock dividend, 3,565. 3,565 minus this. That will give me 465. That is it. Stock dividend must be given to who? Existing shareholder. That's the end. Is there any other thing there? I'll go for the basic. So that thing I'll go for the basic. Oh, 30 September. The repurchase. Will not 30 to express. First of September. We purchase. $125. 3565 minus 125.
3,440.
3
3,440,000.
you know that net income after tax. This one. I'm done. Then factor. 1st of January to 1st of March. 1st of January to 1st of March. January, February.
2/12.
The first one is 2/12. 1st of March to 1st of July.
4/12.
How many months?
4.
March, April, May, June. 4 months. 1st of July to 1st of September.
2/12.
Eh?
2/12.
3/12.
2/12.
1st of September to year end. 31st September,
4/12.
October, November, December. 4/12. Then I'll multiply. I'll multiply. Now nothing to do with that. You let me talk about that. Now nothing to do with that.
The first one is 575,000.
Good. Sorry? First figure is what?
575,000.
575. 575 what?
1,000.
1,000. Thank you, my sister.
000.
Next.
1,188,188
1 million.
188
No, yeah, that part.
188
188.
333. No,
333.
triple. Yes. 333.
Good. Next.
594,167.
594,167.
167.
Next.
1,146,667.
What does it give you?
3,504,504.
3 million. 504.
Yes. 167.
That is it. That's giving me profit after that. I will now determine profit attributed to equity owner. See, termination of profits attributed to its profits after tax preference dividend. How much is the preference dividend?
2,750,000.
No, profits is not, this is
Profit is 7.5.
7.5 divided by minus
2,750,000.
well, we don't remove ordinary dividend. It is the previous dividend. We
Okay,
don't
sir.
remove ordinary dividend.
Okay, come
It
on.
is the previous. Each ordinary dividend has been removed, but we add it back.
Okay.
So what is the answer?
6.2.
So I can now divide it by the weighted average shares. 3504, 167. 3504. And that's it. Divided by 3504. What is the basic?
One seven seven kobo.
1.77. That is it. Any question for me?
Yes, sir. Sir, please, can you go back to where you did the calculation on stock dividends, please?
Okay,
I
ma'am.
didn't copy that.
This is it.
Okay, thank you, sir.
Any question?
So is that 19 for 100 or 15 for
You get
100?
what? 19
This,
over 100.
no, sir,
The
I'm
stock dividend
seeing
is 15% to
15 for 100.
just now.
Okay, sir.
15 for 100. That's 15 over 100.
So under
Don't
it,
forget.
you
Huh?
added under it, you added 100 to 15. I didn't know how we got that.
Treat it like a bonus issue. You have 100. You are giving us 15. 15% is 15 over 100.
Yes, sir.
That means 15 for 100. I have 100. You are giving me 15. Make 115. Divide by what I have, what I get before. 100.
True.
Is that clear?
Yes, sir. Yes, sir. Thank you, sir.
It must be given to who? Existing shareholder. Just like bonus shares. So dividend is given to who? Existing shareholder. Okay, let's take another question. The one stock dividend stock split. Go to page 2 page. Go to question 3. Fresh limited. Question 3, fresh limited. Okay. Fresh issue. What does the requirement tell us to do? The same way, dates. Case. Number of shares. Total shares. Stock dividend. Stock splits. And the weightage.
Sir, what page is this we are solving?
Go to your book. See there. Have you seen it?
No, sir.
Which of the questions is it the one you sent today?
No.
The last I can't find it.
Earnings per share now.
Sir, please, what's the name of the business owner? Maybe we can use it to search.
What's the name of what?
The business owner, is it Fresh Issue?
Fresh. Fresh PSC. Don't mind me.
Okay.
So there's no fresh issue or fresh PLC.
It's there now.
So just check your page, sir, please. What page is that? Or what's the question before it and after it?
Let me check. Class, we can't find it.
Yes, sir.
Everybody in the class?
Yes, sir.
If you go to other areas in EPS question, where we see Omologo, Coco Samba, Fresh Limited, Jeddah, they are the last part.
So that's urgent 2K, not fresh.
What do you call it?
Yeah, Urgent 2K Limited.
Urgent 2K.
Yes, sir.
I know what happened. Sorry. Urgent 2K. Let's see. 1st January.
So 220,000 shares.
1st January. Sold. Fresh issue. 20,000. Next. 1st of March. Sold 30,000. Fresh issued. Next. 1st of March. Purchase. 18,000. 50 minus 18, that is 32. First of July. First of July. Sold 12,000 shares. Fresh. 12,000. That is 24. First of August, stock split. Stock split. 2 for 1. For everyone, we multiply by 2. They have 44. We'll now get the total number of shares after this split. We want to split 1 into 2. Say 2 for 1. We have 1, we multiply by 2. I'll now say total numbers of shares after split. To 4,000 times 2. I'll give you 88. Minus 44. Next. First November. Declare stock dividend. Don't forget stock split must be given to existing shareholder. First November. %. Oh, there's one issue. 1st September.
1st September, yes.
This night, please. This is easy. Plus so next September, $48,000, 48 plus 88.
136.
What do you say?
136,000.
Then 1st November. Well, 10% of 10% of this will give me 13,600. No dividends. Ten percent. 1/10. Half 10. Must be given to existing shareholder. Existing shareholder. Let's go there. Next. 1st of December. I think this 100 plus this. This is 100 plus 136,000.
149,600.
What do you say?
149,600.
Now, 1st December. $24,000 shares. Fresh issue. $24 plus 149,600.
173,600.
172.
73,600.
Let's go to the time factor. So, first of January to 1st of March. How many months?
2.
12.
1st of January, 1st of March to 1st of March. Something has happened.
What am I supposed to be May? 1st of May.
1st of May.
Yeah.
How many months?
Two months.
Write the formula. Write me. Now you can do this one. Let's go to the next one. Question. You know how to study stock dividend,
Yes, sir.
then the reversal of trust.
Okay.
Go to corner PSC. Let's go to diluted corner PSC. Corner PSC. Question 1, corner PSC. Come on, let's go to the requirements. Calculated diluted earnings per share. It does not ask me to calculate basic. It's the diluted earnings per share. Okay. Good. Yes. Under PSC, issue share capital of 1st April 2000. Let's go to the workings. The number of shares. Hundreds. What does it give us? $100,000 divided by 0.2. 3 billion.
1 million.
1 million shares. Okay. He has 50,000 1 naira compatible preferred shares receiving a dividend of 2.5 kobo. For the preferred shares, let me throw more light on it. When you see preferred shares, two things likely happen. The preferred shares is also known as preferred shares. One, according to IAS 32, it can be presented as equity or as a liability according to IAS 32. If it is as liability, you take it as a loan and the tax will be applied. Tax rate on the earnings. Placed as equity, no tax. No tax will be applied. That's what it means. Any position you take, you assume your position. Which position should we take? Or the two?
Sir, can we see the two, sir? For
Thank you,
more,
my
for better
sister.
understanding.
Let's see the two. You also ask $250 convertible, 250,000 10% convertible loan. They will give me the conversion option and the rate. Okay, earnings for the year ended is 12 million. Okay, for me to do that, I must calculate basic to know whether it has diluted or not. Out of this information, which one go for the basic? Only the share in issue. No right issue, no bonus issue. So no need of table. Because you only give me share in issue. That means 5 million divided by 1 million times 100. This will give me 500 kobo for the basic. Now, for the preference shares, so we shall assume the position of the two. As equity now. That means the earnings $50,000 previous year, collecting 2.5 to cover dividend. $50,000 multiplied by 250. Divided by 250 times 250.
125,000.
I will not apply tax because as equity, you are a shareholder, meaning you collect profit after tax. That is what it's telling you. You will not, if I want to determine earnings as liability loan, as liability now. Of earnings. 50,000 previous shares times 2.5 to cover. $125,000 tax rates. What is the tax rate given in the question?
40%.
40%, 0.4 times
That's 50,000.
see the difference. The majority of the question I can ask, 90% of the question, they assume is a liability loan. They assume is a liability. So you also have conversion time.
Sir, please say it again. You said how many percent of the question assume it's a liability?
I said, see, it's one I can have it test.
Okay.
90% of the question. In short, it's 100%. I've not seen one that has equity. They assume is a loan.
Okay.
Oh yeah. Next thing. Conversion to shares. What is the answer?
2.5.
Times 150.
250 here.
So it must be inclusive. It's not at basic. It's not antidilutive. We also have loan. Right? We also have loan. How do you want me to convert the loan? What is the interest on the loan?
10%.
So how much? Very pass. How much is the tax?
Is it 25%? What's in the brackets?
I thought we calculated tax at 40% before.
Yeah. The tax rate given is 40%, sir.
Forty percent. So 40% of how much?
That's 10,000 naira.
10,000.
Yes, sir.
How does he want us to convert it?
2009.
Condition.
$500 shares.
How many
For
shares
each
value how
1,000
many
of
stock?
500 shares by each 1,000 naira of loan.
Yes.
That's 75.
How many?
7,500.
How much is the loan?
The loan is 250,000 as 10% convertible.
Why are we not picking 15,000? Why are we not picking 50,000?
$250.
50,000. Well, how much is the shares?
On the basis of 500 shares for each 1,000 naira of loan.
500
Yeah.
over 1,000 times 250.
Yes, sir.
That is 125.
125, yeah.
I can test for dilution by saying 15,000 over what is the answer?
12
12 cover.
times 100 is 12, yeah.
Then I can now calculate my diluted. It must be inclusive. I will now say earnings from the basic plus earnings of the previous shares earnings for the previous shares. We assume equity. Let me go and check. What is the earnings of the previous shares? We assume equity, let's check. No tax will be applied. So it will
That
be
is
120,
125.
125, yes, sir.
125. What's the convertible loans?
75, sir.
Huh?
75.
No, convertible.
Okay.
It's 125.
125 is the shares. The earnings is 15.
Okay. So
That is it. What is the answer? What is the answer?
Minutes. $437.5. Don't know if I'm correct.
Let's approximate.
438.
The question says we should also calculate diluted EPS if it's now collecting 6 naira. The previous shares is collecting 6 naira instead of 250 kobo. What is my own duty in exam? I'll go and test for that part only, the earnings. We know we assume the position of equity, earnings of the previous shares, provided 6 naira is paid as dividend, preference dividend. He has 50,000 preference shares times 6 naira. That will give me 300. Then for the conversion to shares, we have 50,000 naira preference shares times 1 all over naira cancel naira. So it will cause us 50,000 shares. So I will now test for dividend, test for dilution. That is going to be 300,000 divided by the 50,000 shares. That is 100. This will give me 600 kobo. Therefore, it is what? Anti-dilutive. It cannot be included. It is anti-dilutive. It can never be included. It has dilute. I will ask, okay, the B part of the question, I cannot solve. All other one remain the same, except for the previous years. That's okay. 5 million for the basic, plus that of the convertible loan, 15 divided by 1 million for the basic, plus 125. I will not include because it has dilute, anti-dilutive. That is it. What figure does it give us?
Four, 446 approximately. 446.
That is the end of the question. Let's take 2 more questions on this area.
Hello, sir.
Yes.
Sir, how can we know when it is anti-dilute?
What do you say?
When it is anti-dilute, the
When
anti-dilute. When
anti-dilutive,
are we going? Yes.
when after calculating, it is now more than, when you test for dilution, it is now more than the basic. You will see it. Let's go to the next question. I will explain further. Zeno. Let's take this. Zeno Limited has 5 million shares. Let's go to the requirement. What does it say? In accordance with IAS 33, earnings per share, calculate basic and diluted. Oh, he has only 2. Basic, EPS, diluted, EPS. For the basic EPS, let's go to the working, get our information. We said share in issue, opening balance of the shares in issue as at 5 million. Share in issue, he has 5 million. Then he has 1 million 40% convertible loan stock, convertible in 3 years' time. He also has 2 million convertible in years' time. The total earnings is 1,750, and the rate of income tax is 35%. Oh, out of what go with what basic, is only one thing that is here, which is the sharing issue. There was no right issue. There was no bonus. There was no repurchase. There was no share split. There is no stock dividend. There's no reversal of share split. In exam, what is my own duty? I'll just disarm the basic direct sharing issue. And he has given me earnings in the question to be how much is the earnings?
1.750.
I'll just divide to get my basic. What is the basic?
$35 kobo.
35 kobo.
Yes, sir.
Thank you, my sister. I'll put. I will now go to other. He has two loans. Let me see whether the two loans are first of all determine the earnings. For the first loan, termination of earnings. Said 1 million. And 0.14. How much is the interest is supposed to, that will convert it to earnings? What does it give us? 1 million
That's
times
140,000.
so 140,000. Interest will not be paid again. Then the tax people will collect tax rates. What is the 0.35
That's 5%.
times 140? How much am I paying out?
That is 49,000.
49,000. 140 minus 49,000.
$91,000.
Then the conversion to shares. How do you want me to convert it to shares? You must give me the conversion term. At the rate of 2 shares, so the 1 million principals. How many shares are we giving in return? Times shares will be up. Don't forget 2/10. Naira cancel Naira. So give me how many now?
$200,000.
200,000.
Yes, sir.
Of now test for the illusion. $91,000 divided by 200,000 times 100.
$45.5.
That is 46 kobo. I'll go and check my basic. This is anti-dilutive. It's more than the basic. The basic is 35 kobo.
Okay.
You cannot put water inside soup. I say after you have put water, it is now sweet. It's not possible.
Okay.
So, do you know when it is anti-dilutive now? My sister, I want
Yes,
to
sir.
ask that
What if
question.
it's lower?
Then it will be inclusive now.
Okay.
That's what we have been doing now. Anti cannot be included. Then he has other loan again. He has another loan. I was not saying for the second loan. Convertible to. What is the loan he has?
200 million. Or 2 million, sorry.
He has 2 million.
At 10%.
Then I'll be paying interest of 0.1. How much is that?
Go out.
200,000.
Yes, sir. 200,000.
Then the tax rate. 0.35 times 200.
$70,000.
70,000 will go to the government. So what will come to our pockets? Then conversion to shares. The principal amount. How do you want me to convert to shares? 3/5. So the 2 million times 3/5 times 2 million. What does it give us?
1,200,000.
Oh, 1.2 million. Test for dilution. Now equals to 130,000 divided by 1.2 million. That's 100. How much is it?
$11 kobo.
11 cover. Therefore, it is inclusive in the calculation. So let's go to the diluted. Oh, that's okay. 1,750 plus 130,000 divided by 5 million plus 1.2, which is going to equals to 6,200 188. I will not give me the answer.
30 kobo.
Yes. So can you see the basic? 35. That's problem. Let's take another question. ABC Limited. This one, can we finish under 30 minutes? Habib Koko. Okay, let's take ABC Limited. Yes.
11.
Huh? What do you say?
So it's up to 11.
When is the class supposed to end?
By 11, sir.
You say 11, 11:30.
11.
Okay. For your assignment.
Uh, okay. So I promise to be giving us solution after the assignment.
I'm not giving.
So that we can cross-check.
Okay, no problem.
Um,
I will send everything.
okay, sir.
I will also send ABC. You go and look at it very well. Ask
Okay.
question.
All right.
Another one I can send.
All right, sir. Thank you.
So next class, group accounts.
Thank you.
You're welcome. Good night.
Thank you, sir.
God
Good
bless
night.
you, sir.